How do you do swing trading daily chart analysis of large cap stocks, upward large cap stocks, if you are using long up to long swing trading strategy? You open your watch list of stocks, and here we have our upward large cap stocks, and we are going to analyze 3 stocks from the list. You'll open a daily chart as well, and we are using Thinkorswim platform. You can use either maximum daily chart or 1 year daily chart. 1 year daily chart may now show you all your support lines or uptrend lines, especially the ones that are low, that the stock didn't touch base with during 1 year time frame, may not be on 1 year daily chart. But 1 year daily chart will show you 52 weeks low and 52 weeks high. For large cap stocks, you might see the high on upward large cap stocks. You might see the high on the maximum daily chart, but you may not see the 52 weeks low there. But you will see it on 1 year daily chart. And I like to see that 52 weeks low as well. But for other reasons, because there is another trading strategy that I used in the past, 52 weeks low and 52 weeks high trading strategy that I used before I start swing trading in 2024. So I used the other strategy for years, and we found that I know about swing trading. I like to improve 52 weeks low and 52 weeks high strategy with few tips that I learned from swing trading, so that I have 2 trading strategies to use to generate cash flow from the stock market. So the first one we are going to analyze is CBRE. CBRE, we have our trend lines, long uptrend lines that we like to buy the stock at when it comes back to it. But right now the price is higher up compared to that. There is another things we are observing. These particular stocks, I do not understand the pattern. It has upward feel to it. However, it can go sideways as well, like have consolidation pattern, but almost a year time frame consolidation pattern. So when it reached the previous trend, the trend line, sometimes in the past, it went up, pulled back to a support line, and just went sideways within that area for a while. We have our x-axis that show the years, and the y-axis that show the price from 0 up. So that's 1 year time frame here, and that's 1 year time frame. So pretty much almost 1.5 years or so, it went sideways and then went up, and then went up again to create another high here. So I don't know if that's a pattern things for it. When it reach a new high, it will pull back to consolidate for a while and then go up again. I'm not sure, because it has not touched base with this lower trend line for a while and touched base with this one a couple times. So we have our trend line trace, but because it's going sideways, we have this resistant line passing by the peak of this mountain, which we have those peak touch base with as well down, so that if you pull back to that area, to this resistant line or this support line, we can buy and see if it's going to, go sideways there again, or if you will decide to come down here. We don't know, but we'll just keep observing it. But if it reach a peak here and it's going to repeat the same pattern, it could well be around this area. Therefore, it will have some ways to go before start doing the sideways things here if it's going to repeat the pattern. So that's how we use maximum daily chart, by comparing the pattern, the current pattern that the price is showing, to the previous one, to see if there is some similarity on it that we could use to help us make our buying or selling decisions. So yeah, and yesterday the price went up. That's why the closing price was highlighted in green. The price went up, meaning the closing price at the end of the day was higher than the opening price in the morning. And the red bar, that is the green bar. So the red bar, that means the price went up that day. The red bar means the closing price at the end of the day was lower than the opening price. The price dropped that day. We can go to 1 year daily chart. It will just show us 1 year time frame. And yeah, so we can say that for a while it created the wall, the up side of the mountain, and then reach a peak here. So we don't know that's going to be the only peak. In fact, let's go back to maximum daily chart. It's been creating peak, it's been creating a higher, a new high from this area. Every single one of those small mountain was a new high, and then it dropped here for a little bit and then went back up there. So we have multiple peak there, just like probably here as well we'll have some mountain there. But yeah, I don't really understand this stock well, just because of this sideways that it did. So let's go to maximum monthly chart to take a look at it. So we are on maximum monthly chart, which we do not swing trade with, but we use it to start tracing our long uptrend lines, and we use it to see the overall trend of the stock, to see if it is an upward stock or not. So by looking at it here, it has a tall mountain here and then pull back for a while. Okay, so pull it back down here for multiple years. So I don't know if this is an unusual situation, I'm not sure. And then it created a tall mountain here again and pull back. So it could well be a pattern for this stock. And here was around, it was not in 2020, it was around 2020. This is 21, 22. So this mountain was reached in 2022. So I don't know why. Do you see how I'm doing those analyses? So, and right now I'm wondering what this stock is all about. What do they even produce, the company? And that is not something I care about when I'm swing trading. It will take a while for me to wonder those questions. So, and because I don't know why in 2022 they reached that peak, but it tends to be a pattern, things for them to have that peak and have some lows for a while, sideways pretty much. But anyway, but it was a little bit uptrending here. Then they have this, and then they have this that we are looking at before. They'll have this low for a while, and then it create that. So we can just assume it's going to be doing about that same thing. So it didn't come back down to this line for this one. So chances are when it pull back, it could well pull back to this line, or I don't know if it's going to use this as a resting point. We traced a little bit, but we didn't continue. We can continue that as well. But now by coming to maximum monthly chart to saving a bigger picture of the chart, we notice that because on the maximum daily chart, we are looking at this portion of the chart. On 1 year daily chart, we are looking at this portion of the chart. On maximum daily chart, we are looking at this portion of the chart. On maximum monthly chart, we are looking at even higher portion of the chart. You have the years at the bottom. So, and by looking at maximum monthly chart, we see that it does actually have that pattern of a big mountain and multiple years of just simple uptrending, and then a big mountain, and do that as well. So it could just be a pattern for it. So where is going to, let's go back to maximum daily chart. So where is going to pull back before going up, we don't know. So we must well continue tracing this resistant line as well, which is little bit connecting with this line, with this oblique line, to see which one of this junction and this junction that it will try to use to rest before going back up again next. And we can just buy when it's ready to start going up after pulling back to either one of those trend lines or resistant line, whichever you wanted to use as a support. But yes, this is an unusual pattern for a stock among stocks that I have on our watch list. We never traded before either. So CL, did you see how we try to understand the pattern, the chart, and the pattern that the price is drawing, to see if there is some repetition that we should expect to repeat itself? And while we added, since that question crossed my mind, we can come here and wonder why it does. It is in a real estate development management, so real estate service. So went public in 2004. Okay, so it takes a while for me to wonder why is it even that a company does. And those are the sectors, industry, sub-industry. So it's in the real estate. So I don't know, with the economy we have, I don't know that will have an impact on it or not. I will assume so, but for right now is flourishing. So CL is the next one. So CL is another one that I don't really understand. So we traded a little bit in fact, few times in 2024 using short up to non-swing trading strategy, and traded along the upside of the wall of the mountain going up, and then it pulled back. The arrows here shows where we bought them, and the one on top shows where we sold. So the arrows at the bottom shows where we bought, and the one on top shows where we sold, and we bought it a few times. But with the long up to long swing trading strategy, we have not purchased it yet. We are seeing it going sideways somewhere here, and then it went up and pulled back, and this is the trend line that we are hoping to get in. But right now it seems to be resting at this resistant line and start going up from there. So at this point, it seems like it may not come back down to this support line or up to line, but it might just decide to go up from here. Is it the case? I'm not sure. So if that is the case, we have, let's see here. We have an uptrend line developing there. This low, the dark red bar, is higher than this one, which is higher than this one. So we could easily, yesterday it was a green bar, the price went up yesterday. Today we could buy some to see if that is a new buy. And something we could do as well is this descent passing by the mountain peak. Let's extend it and see how far we can go with it. Oh, come on. Okay, it didn't touch base with this one well. Let me okay, so by connecting those lower highs, in fact they do touch it all the way to here. So it went up, pulled back, went up, pulled back, and went up. So it started going higher about this line here. So we have an entry point there, we have an entry point here. Let me make it a little bit bigger for you to see. So do you see this high by just by going with this line that I traced? I don't use that often. I just like based on at this resistant line. If we want to buy around this resistant line, I'll look for higher low. So I like to look for two. So I have this higher low, this low, the bottom of it is higher than this one's bottom and is higher than this. So I have two higher lows here, and this will be an entry. Today will be another entry as well. By touching the lower highs all the way to this trend line that I traced here, we could see that it went cross it, pulled back to it, went up, pulled back, and went up. It didn't go below this line. So it's another possibility that it could well decide to go up from there, but it could still turn around though. Those are just little things to just guide you to know if it's down, going down. So we could buy some, but I just don't really understand this. I almost took it out of my watch list, like flag it not to buy it, because and just keep observing it, because I don't really understand its pattern. Do you swing trade CL? It is Chloros. So on this note though, let's go to maximum monthly chart to see if we can have a better view of whatever is going on here. So let's see if we'll be able to even trace anything that will go to where. If we trace those, it's not going to be any too far from this one. So like, yeah, it will be pretty much going somewhere there if it's touching base with those. This line seems like if it's extended, let's see, okay, it's not going to touch this area without going across those. So let's see, I think it's just good to leave it where we leave it. We have it. Okay, so it is uptrending, but frankly, and it does a wide mountain, will touch it. Did a wide mountain to touch it. So I do have a feeling that at some point it will come back to this trend line here, because you see this wide mountain, it tried to come here to touch it, but and then it went back up, it came back. So it's just like, and then here for the longest time it was up and came back, and now it have this tall mountain and it's going up from there. So I think we are not going to buy it, because it came back to this line multiple times for me to feel like it's going to come back to this, and we do not want to be extended somewhere there. But you see this area, it was kind of sideways here for a while, so it does do that, goes kind of almost like having sideways look to it. So it could go. Let's zoom a little bit here. Do you see how it go down, go back up, go down, go back up? It could do that here. When it will, from here it could go up, go back down, and all those, and then it will try to come down to here at some point. But anyway, I just prefer to keep observing it, because yes, we could get in there, but I don't know how far it will go before it might try to go somewhere up and come back again. I really don't know. But yeah, it could just have this tendency for a while before it will come down. So far it has this, but who knows, might try to do it again. Yeah, and when you have stocks on your watch list and you do not understand the pattern, don't take any action. Just keep observing what it's doing until it's clear enough. That is what is going on. So it's okay if you do not buy it, and just keep observing it. You might crack the code at some point. So the next one is CMG. We purchased it this year. And by the way, we are doing stock daily chart analysis on March 6, 2025 to see how they perform on March 5th, 2025. So the market close, it has not opened yet on the 6th, and we are analyzing the stock. So CMG, well, we have this trend line to buy at, and we bought a little bit higher up. It pulled back to it and pretty much start going up from there. Yesterday the price went up. So let's zoom a little bit to see what is going on here. So we were thinking about buying some more, but again, I don't think there is much difference about where we bought it. It's like 57 and 53 is like, I don't know, $5-6 difference, and I don't think there's a reason for us to buy some share again. But yeah, we purchased it there. That's why the arrow is there. It went sideways a little bit, pulled back to that trend line that we highlighted to buy. So that means we got in too early. So it pulled back to it, and now it start going up from there. So, and today we have a green bar there. Let's see. We have a green bar here that follow a pullback. This is a little bit lower than this though, but we'll still have an uptrend line going on here. We can highlight this and drag it here. You see, it's still up. It's not like going down, it's still up. So yesterday was a buying point. Today could be a buying point for who would want to buy this stock as well. Alternatively, because it's at the trend line, you could wait for that to go up and pull back, like wait for the next red line to see if it's higher, if it's still higher than the previous one, and at the first green bar you can buy some share. So because it's at the trend line, it's going to linger there for a little while. Does that make sense? You see, we got in here a little early, and it went sideways, which and you'll see those are lower lows, create a kind of lower lows. If I wanted to connect those lows, it's going to be going down, and it went down. So going up here, didn't stop it, it went down, but it's more like sideways here and went down, and now start going up. So some stocks, they are on the trend line, they will actually want it to change direction, not just pulling back going up, pulling back, that is it did here to create that uptrend line, or here to create that uptrend line, but they will try to actually change direction. So that's why it did. And I think I just got in too early. It was quite far from this trend line. So, but yeah, I got in too early, and buying it around the trend line would be more ideal. So, but again, I was not too far from the trend line. So now that we have it, you see how we are analyzing the chart, comparing where the price is to the trend line we like to buy it. So for this case, we already have it. Therefore, we will be, comparing where the price is to where we bought it, and compare where the price is to where we will want to get out. So for this month, we'll want to get out at the new high. So let's go down a little bit to actually see what is going on. Okay, so when we are looking at the chart, it touched base with this, went up, touched base with this, and we have a tendency that it may not come back to this trend line, but might just as well continue with this one. So when because it's making a similar width, height mountain along this trend line, so that means buying it, we will want to wait to sell it at the new high. But here is the things though, it reached a new high here. So when it pulled back, it went up here. This is not a new high, and it pulled back. So we bought it there at some point, we sold it here. You saw we bought it there and it pulled back on us. So we bought it at the descent of the mountain. The mountain is here. We bought it there right after it reached a new high there. It turned out to be the descent of the mountain. So we were stuck in it. It pulled back, went up, and when it became profitable in our portfolio, we just sold it, which was a good thing as well. We didn't wait for the new high to reach, but as soon as we have some profit in it, we sold it. And guess what? Shortly after, it pulled back. And when it was around this area, we bought it again. But now my concern is this didn't go all the way high to create a new high. It was a lower high, and now it pulled back and start going up. So we don't know if it's in the process of going down to this. In that case, well, it may not really reach a new high until it come back down here and start over to make a bigger, wider mountain. So we don't know. We will just keep observing it, but we'll get stuck in it for a while if it decided to continue down here. So buying it here, if it decided to come down, will be an early entry as well. So, but we bought some, we won't buy it again. If it comes down to here, maybe we might buy some more when it's about to go up, and then our exit will be the new high. But we will just see what is going to continue doing. So this concludes how we analyze those three stocks using their daily chart to compare how they perform on March 5th, 2025, and where they are compared to our entry point and exit point. So long up to long swing trading strategy consists of you handpicking stocks to create your watch list of upward stocks, by preference large cap upward stocks if you are a beginner swing trader, so that you use stocks that do not fluctuate too quickly to conserve your energy and focus on practicing the strategy rather than doing that and keeping up with a very a stocks that fluctuates quickly. and then you trace your long uptrend line longer than 1 year time frame to pass by the lows, making an uptrend line or support lines, and pick some to color code to be your entry point. They will be the one that the stock touch base with multiple times in the past that you feel like it will come back to those trend lines to rest and go back up again. And when you just do your daily chart analysis to see where the price is to where your next entry point is, and when the price pull back to the trend line and start going up from there, you'll start looking for higher lows. And when you observe about 2 of them or so, you buy at the first or second green bar that follow a pullback. Once you buy the stocks, you'll continue to do your daily chart analysis, comparing where you enter the trade, where the price is to your next exits. For large cap, upward large cap, the new high could be your next exit, depending on where you enter the trade. If you enter at the valley, when it start going up, you will accumulate a lot of profits along the way, and once you see a new high, you exit, you sell the stocks. At the entry point and at the exit point, it is good before you make any decision to buy or to sell to compare that same area to the past. When the stock touch base with it, did they linger there before going up, or did they, did it just, go up from there? Will make you decide if you have time to decide if it's done going down and start going up, looking for more higher lows before you enter, if it's going to linger there for a while or not. You can compare before you enter. At the exit point, you can compare the previous high area to see if it created multiple new high. You see, this one created multiple new highs. The new high started somewhere here. That is new high there, and then when it pull back to the trend line and start going up from this area, we start reaching new high every few days. And the pullback, a new high was reached here. So when it's creating, it's going to the mountain peak, it was creating a new high along the way. Knowing that if you buy at the valley, maybe when you reach the first new high, you might decide not to sell it, because again, it's going to be pulling back and going up higher and higher. You might decide to stay in for a while, or you might decide to exit at the first new high you got, because you'll have accumulated a lot of profits. So those are the decisions you will have to make from stock to stock, and the goal is not to maximize your profit, get all the maximum profit that is there to get by buying it maybe here and selling it there necessarily, but getting some profit so that you do not lose it all. So, and that is pretty much what our strategy is about. Locking in some profit, not necessarily locking in the maximum profit there to lock in that trade, but locking in some profit and wait for the stocks to continue doing whatever it's doing and pull back to the trend line. And when it start going up again, you get in again. And by doing that, you'll be generating cash flow from stocks that you could have invest in long term. And by swing trading them, you'll be locking in those swing that they are doing away from the trend line. If you invest in long term, you'll be accumulating money along the trend lines. But by swing trading those stocks that you could have invested in long term, they are stable stocks. If you buy at the wrong place and it pull back on you, you know that you are not going to lose your money. It's going to go up at some point. It might just take a while, and you will sell it for a profit. At the same time, you will be locking in the fluctuation that the stock is doing away from the trend line. You'll be locking in those profits, even if that means you'll be buying a nest at a higher price compared to if you just have stayed in that investment long term. the fluctuation that you lock in will offset that high price that you'll be paying as well, with some change left, in my opinion, and creating a cash flow for you that you can use to supplement your paycheck. If you have a full-time job, not necessarily to supplement it to spend more money, but to supplement it in a sense that over time your swing trade will profit from your swing trade will be higher than what you are making from your paycheck, giving you another stream of income beside your full-time job. Thank you. We thank you very much for your time. We thank you very much for watching our videos. We thank you very much for all your comments. And we thank you very much all that subscribe to our channel. It's good to have a stock watch list of hand-picked stocks that you can analyze within 1 hour every day. And at the end of the year, the ones that you didn't have a good experience with, they didn't align with the strategy you are using, you flag them during the year. You can take them out and you can go to your longer list and pull the one that you didn't trade to add to the list as you take some out of your list. And over time you'll just have a stock watch list that you are comfortable with trading year around. You are now going to go trade a stock, look for a stock to trade every day based on what the news are saying. If you do not trade with news, you'll just go to your watch list. If you find something to buy that day, that's great. If you didn't find something to buy that day, that's great as well. And using long option long swing trading strategy, if you have a full-time job, you'll be able to manage it in the sense that you are not going to buy stocks every day. Therefore, you are not going to have a lot of transactions to record every day in your swing trading spreadsheets. But you are going to analyze your stocks on a daily basis to get yourself familiarized with your stocks chart. And just that small, with long uptrend swing trading strategy, you can even start with one share, $300 per trade, or $100 per trade for stocks that cost less than $100 a share, as long as it's enough to open a brokerage account or a Roth IRA with a brokerage firm. That's enough to buy one share of a stock on your watch list. You are good to go. Just that small. Aim from the new high. 5% to 10% return is good. If you are looking for tips on how to create your own watch list, will you please check the description for the list of our playlist of swing trading related videos, including the one where we catalog our swing trading, how to create your own watch list. And we have some videos published, some are not published yet, that you can find in some of those playlists. If you have a question related to any one of those topics, and we have a series going on for watch list as well, and we are almost done publishing from this list, and we have another one that we start recording as well, to go through the whole process on how you will filter a stock. If you come across a stock and you wonder if you should add it to your watch list or not, how you should filter the stocks, like to see if it's good enough to be added to your watch list. We are going through that process with each one of large cap stocks that we have pulled as the master list of large cap stocks, putting them one by one through the filters. That way you can see the whole process in one video. We started that series as well, and we will start publishing them once we are done with this one, which we are very close to be done publishing. But you'll be able to access those videos in their related playlists. Thank you so much for your time, I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there, $1 at a time. Don't underestimate your profits. You are not losing money, you are making profits. Even if it's a small profit, it's a profit nonetheless. $1 is going to increase your account by $1. So little by little, the profit will increase your account, and more money you will be encouraged to save from your paycheck and add it to your account to increase your account. And little by little, you will, start generating enough from your swing trade. Just go through your finances, know how much you make from your job, know how much your monthly expenses are, your basic need expenses, your wants, and see the ones you want to keep, the ones you want to give, you want to stop spending on, so that you can generate some income from some disposable income from your paycheck to be able to start swing trading with a little by little. Even if that's $100 a month that you pull from your paycheck to send to your account, to have it there until you have enough to buy a share or two of a particular stocks that you are analyzing every day. It is something. Just start small and go from there. And I didn't paper trade. I start trading with real money, starting with $100. When my husband and I were trying to pay off debt, we are using our monthly allowances of $100 that we each take out of our paycheck. We were using that to trade. We'll just put in our account. We didn't do that every month, but when we have a little bit saved there, we will buy stocks. And we used to buy penny stocks because we could buy a lot of shares doing that. We make money doing that, we lost money doing that as well, but it allowed us to understand the stock market and not be afraid of trading. And we did that for years using 52 weeks low. We would buy a 52 weeks low and sell a 52 weeks high, double our money. And a lot of those stocks, some of them bankrupt as well. They are penny stocks after all, but it teaches us a lot of things. And as we pay off our debts and start putting more money in our account, we became more responsible with what we are doing and stop trading penny stock and start trading stocks that cost more per share but were more stable. So, well, the learning process was long because I was investing long term as well, and we are trading penny stocks. So I know very quickly that buying penny stock and try to invest in a long term was not a good idea, because some of them will bankrupt on me. And the stocks that were more stable, like Johnson & Johnson, I have Johnson & Johnson in my portfolio for a while now, maybe, I don't know, more than 5 years ago. It's still there positive. And so, but yeah, those things just make me realize that, some stock are more stable than others, and little by little, I shy away from those penny stock and veer more from more stable stocks. So by the time I start swing trading, which was in 2024, I pick large cap stocks to work with, and more precisely upward large cap stocks that I could invest in long term. I decided to swing trade them instead. So I don't know if that's a good idea or not, but I just know that if I get stuck in it, well, it will come up at some point and I will, make profit in it. But another example is IBM. I bought IBM years ago, and it has been negative for the longest time in my portfolio. Like negative, I think I must just have purchased it when it was higher up somewhere. I have no idea. But last year it became positive and I sold it. So, and I have no idea where I bought it, but if I bought it somewhere around this area, well, for the longest time you can see that it was lower than this area. So I got stuck in it for years, and when it became positive last year I sold it, but you can see that it continued to go up. But yeah, if it was a penny stock, well, I don't know. But yeah, those things are so volatile. So penny stock you can trade the short term, but investing in them long term is a very risky thing compared to Johnson & Johnson and IBM. That's why I say, yeah, penny stock, they might be penny, you might buy a lot of share, but frankly, if you start swing trading with large cap stocks that cost, a lot of money. If I put Walmart there, it's less than $100. It's $95. So when you are trading, even though it's a large cap, it's less than $100. And I don't know, CMJ that we just analyzed might be one of it. It's $53. So yeah, if you can only buy one share out of $100, is if you buy at the wrong place, you are not worried that you will lose your money. It will come up. Even if it takes years, it will come up. So another example would be Johnson & Johnson. I purchased Johnson & Johnson in my own account years ago, which I talked about, and that has been positive and still positive there. But when I purchased it in my husband and I joint account, I don't know where I purchased it at. But frankly, that things will be up sometimes, will be negative sometimes. And this year, last week or so, it was positive again, and I just decided to sell it. So I think I bought it in 2023. But you can see that if I'm putting 2023 here, you can see, it has been on the sideway and down here. So as soon as it became positive, and I have a little profit in it, I just sold it, like $45 profit or so out of $2,000 that we pay for it or something like that. I just sold it so that I can free that $2,000. But yeah, so if I go back to maximum later for us to see the trend, you can see that it's an upward stocks, but kind of add one can be up a little bit and come down. That's why it's now on my watch list. I filtered out of my watch list because it didn't meet some criteria. Is the price now is lower than previous highs here. So, but again, when you buy those type of stocks and the price pull back on you, you are not afraid of losing your money. Does that make sense? And it is in that sense that those large cap are more stable for you to start swing trading with, using real money, not fake money, paper trading, but using real money, starting small, one share at a time, practicing it. If you spend $100 and you got stuck in it because the price pulled back on you, well, you leave it there. You save another $100 and buy another one, and little by little, the strategy you are using, you'll fine tune it to see what is working in it, what is not working, and so forth. And you just take notes and and just continue taking note of your experience and so forth. And before you know it, you'll fine-tune the strategy you are using, and you'll gather stocks that are reacting well with that strategy. By taking some out of your watch list, adding other to your watch list every year, you'll end up having a watch list that is well designed to match the strategy you are using. At least that is the goal. It takes time, but it's well worth it. Thank you. We thank you very much for your time. We thank you for watching our videos. Thank you. And good luck in your swing trading journey.